Hey everyone, in this video we're going to be going over Coinbase. We're going to do a little bit of a stock analysis. We're going to go through their Q2 2021 earnings report, and I'm going to let you know what I think about the stock, if I'm building a position, if so, how much. And before we get into the details, if you could smash the like button, it really helps the YouTube algorithm. I really appreciate that. And if you haven't subscribed yet, definitely subscribe. We just passed 800 subscribers yesterday, and I'm definitely trying to get us to that 1,000 mark. Appreciate the help. So since the IPO of Coinbase, I've been watching this stock and I've been waiting to start a position. Now, Coinbase closed on Friday at $261.25 a share. From its IPO, this is down $80.75, down 23.61% since its original IPO. So the stock is down. This isn't the 52-week low, but we are far away from the highs of the stock. Now, as far as getting into the valuation, because the share price doesn't really mean much, $261, if we want to look at, based on its most recent earnings, its trailing PE and its forward PE, it has a trailing PE of 27.5 and a forward PE of 22.37. These metrics are now starting to make sense for me to buy. In the past, they had lower earnings, and the stock was at a higher price, so their trailing PEs and their forward PEs were just so high that I couldn't get myself to buy the stock, even though I like the company. But now these metrics, they're starting to make sense, and I am seriously considering building a bigger position than I currently bought on Friday. And we're going to go over what I bought on Friday. But let's first go over the Q2 2021 earnings. First, we're going to point out that this company has massive scale. Here's just some company highlights. 68 million verified users, 462 billion in quarterly volume traded, $180 billion of assets on the platform. They are in over 100 countries and they employ over 2,100 people. This is definitely not a small company. This is a company with massive scale in the crypto space. So they are expanding their product, they're expanding into new territories, they're also building more tools, they're enhancing the Coinbase product offerings for developers and on the app and which cryptos they're holding. But this video, rather than focusing on the product or new territories they're getting into and that part of the business, I just want to focus on the numbers. This stock as an investment is really just based on numbers. So regardless of the business they're in, we're gonna really just get deep into these metrics. So first here we have key operating metrics. The first one is monthly transacting users. So in Q2 2020, 1 year ago, there was 1.5 million members. If you fast forward till now, 8.8 million. This is a massive jump just year over year. And if you look quarter by quarter, it's just a nice increase. 1.5 to 2.1 million, to 2.8 million, to 6.1 million, to 8.8 million. Then we see trading volume in billions. From Q2 2020, there was $28 billion of trading volume. 1 year later, $462 billion in trading volume. I mean, these year-over-year comparisons are kind of mind-boggling. And if you look at it quarter by quarter, there's just this nice increase, 28 to 45 to 89 to 335 billion to 462 billion. Then we look at assets on the platform, 26 billion a year ago to $180 billion today. Now, we do see a nice increase. Last quarter, there was more assets on the platform, 223 billion versus 180 billion. Now, the decrease quarter over quarter in assets is not because there are less people using it or less volume, because we actually see more monthly transacting users and more trading volume. It's just because the assets themselves, like the price of Bitcoin, have went down. So as those go down, that's why there's less total assets on the platform. But still a massive increase year over year and a nice just trend upwards across the board. Now, when we look at the financial metrics, we see revenue going from $178 million to over $2 billion year over year change. Quarterly, just massive growth in revenue. 178 million to 287 million to 497 to 1.6 billion to 2 billion. Revenue just going through the roof. Net income as well. Their margins are insane. So this net income just hitting the bottom line, 32 million a year ago, 1.6 billion this quarter. And quarter by quarter, it just went up. 32 million, 81 million, 177 million, 771 million, and 1.6 billion. Their adjusted EBITDA also increasing from 61 million to 1.15 billion this quarter. And these aren't, I'm not talking yearly numbers, these are quarterly numbers. So amazing, amazing growth across the board. Now these numbers, they clearly show growth, but I'm going to show you these numbers on charts just to make a more visual representation on how insane this growth is, because it's one thing to just say it out loud, it's another to just see with your eyes this accelerating growth. So in this first chart, we see monthly transacting users quarter over quarter. As you can see, it's getting bigger and bigger each quarter. We already went over the numbers for it, but just massive increase, and it's accelerating upwards, not just staying at the same rate going upwards. And we're going to kind of see that across the board. So monthly transacting users, way more of them this quarter than last quarter, and way more this quarter than a year ago in the same quarter. The next thing we're going to look at is the revenue. We can see that they're starting to make more revenue in other things besides their just traditional business. So we see like the red part being their other revenue rather than their general revenue they get from, I guess, transactions and all of that. Now revenue blowing up as well, massive increases quarter over quarter, and huge increases recently in the most recent quarters, so the year over year looks insane. Now this is also showing you the blue line is still revenue, but it's showing it to you with operating income next to it. So we see because of their high margins, I mean, tons of this revenue is just dropping down, it's just dropping to operating income basically. It cost very little on their revenue for them to make profits on it. I mean, every additional dollar is basically very low transactional cost for them versus what they're getting. Now the net income, the bottom line, is growing like crazy. If you see this most recent earnings, Q2, net income was over 1.6 billion. I mean, this is a massive number. If you look at it from a year ago, I mean, it's just, you would never think in 1 year you could go from such a small number to such a high number that fast. So the growth is accelerating like crazy. It remains to be seen what happens next in the future earnings, but all we can go off of is what we have today. Now their margins, this is their profit margins. We're talking about 72% profit margins in Q2. These margins have been going up. These are insane, you know, I guess as their volume increases, their margins get better with scale, which is such a good thing because they are basically scaling like crazy. We're also going to be looking at the margins when it comes to the operating margins rather than just the profit margins. These operating margins, they did come down slightly versus Q1, but we're talking about 40% operating margins. I mean, these are insanely, insanely high margins as well. So clearly no issue across the board when it comes to margins, when it comes to its revenue growth, when it comes to its net income growth. Everything is basically, you know, looking great. Now I want to go over the R&D spend. They are spending more on research and development, which is a good thing because the more they're spending on R&D, the more things they can come out with to continue to drive revenue growth and continue to drive profits down the road. So even though they are spending more on R&D and they are spending more across the board on all expenses, which we're going to see in a second, they are still making more profit, not just more revenue, but more profit with higher expenses. So this chart here shows you all the expenses, including that R&D spend, which was in yellow, but across the board, their expenses are much higher in Q2 than they were in Q1, and obviously way higher than they were a year ago. But even with these more expenses and these higher expenses, the profits are just insane because of how much margin they have. They're able to spend a lot more, yet make a ton more. If we're just looking at revenue, I did show you that it was up a huge amount, but if we're putting it in percentages, it was up 1,095% year over year. That's how much their revenue grew just from last year. So that's basically the numbers. Now, these numbers are insane. The growth in revenue, net income, it's incredible. And the valuation at a forward PE of 22, this is extremely cheap for a company with this kind of growth. In my opinion, is the only reason it's this cheap is analysts must not expect that they're going to continue to grow. Like they must think that, okay, they're going to kind of stabilize here or maybe come down, and that could totally happen. But as is, this is so cheap. So I mean, I had to start a position. I bought 500 shares on Friday at a cost of $258 a share. It comes out to just over 130K. Now, this position is basically, it's a more speculative, as of their numbers, it is a value position, in my opinion, with the growth. But the thing is, it's speculative because we don't know if they're going to continue to do these numbers. The crypto space is so new. So, that's also the reason I'm not going to be giving a price target. Because when you give a price target, it means you have to project future revenue, future net income. And the crypto space, it's just so volatile. And with these insane growth rates that they're currently having, it'd be so hard for me to predict correctly what they're going to do. Now, I could just make up some assumptions, but it's not going to add any true value to you. I think the honest truth is we have to wait and see how their earnings are going to play out in the future quarters. If they can keep earnings the way they are and grow them, then this stock is so cheap. But if they drop earnings a lot and they come back down and then they have to build from there, then this stock could be a little expensive. So it's tough. And that's why I'm just building this position. It's a starting position for me. I'm waiting and seeing before I add more. If you did want a price target, I just threw up the tip rank so you can see it. There are 14 ratings, 10 of them are buys, 3 are holds, only 1 of them are sells. The average price across the board was $362, which represents 38.5% upside from where it is. The highest price target on tip ranks was $500 a share. These are all 12-month price targets. The lowest price was $274 a share. So that should just give you an idea of what other analysts are putting out for their 12-month targets. Now, I want to be in this stock. That's why I started this position. And this stock, I wouldn't be surprised if their future earnings, like I said, grow like crazy from here or have a massive decline. Because the volatility in crypto is still, it's too new of a space for the public markets to really get an understanding on how things are going to go. It's going to be a bumpy road. Now, what do you think of Coinbase? Do you own the stock? Do you like the stock? What do you think of these numbers we just went over? Comment below. Please like the video if you've made it to the end. Definitely subscribe to the channel if you haven't subscribed yet. Thank you for watching. I appreciate you all. Until next time.